Hi, welcome to the Market Alert for Friday, the 17th of November 2023. So bonds and bullion soar on dismal data amid carnage in crude and cryptos, Bidenomics breaking down and regulators wrecking dreams. So US stocks were choppy and yields declined amid soft data release. So again, there's talk of dovishness in the markets once more. Economic news today, 7 a.m. retail sales for the UK, there to show a 0.6% increase if the forecast is to be believed and the actual comes out at this level. Then over to Lagarde, she's speaking at 8:30, so it'll affect the DAX, or could do, and then building permits from the US at 1:30 p.m. Okay, let's have a look at the markets. Bit choppy yesterday, and kick off with the Dow. So in the Dow we can see we've got resistance at 35,013. Wednesday we attacked this, failed with supply, some selling coming in. Yesterday we didn't get to the high of Wednesday, and overnight we're sideways there. But it's got the potential to move through this area. It's Friday, they like the markets to be close on the high during a Friday. Yesterday very choppy when the Dow opened, but managed to pull back yesterday before the close. In the German DAX, we've got resistance at 15,991. That's 16,000 psychological level. You want to see the market get through this. Each time it's gone through this level, you will see the markets come back. So let me just compress the chart a bit. This is around the 16,000 level, and you can see 3 times there the markets failed to hold. So it'll be interesting to see if it can. So daily charts needs to get through the high of yesterday, starting to make its way up at the moment, but it's likely to have a bit of a pullback at the open before moving higher. Yesterday we saw the follow through of the UK CPI numbers from Wednesday, and then the market moving lower with the Dow in the afternoon, and then at the moment currently above the close, and then we've got the high up here that we need to take out as well. In the S&P 500, 45.16 is a resistance area. We'd failed to get above yesterday's high in the S&P, but today it looks like we may make some sort of effort to get through. It's only just above here. Again yesterday sideways, and then even bigger sideways with the news, but managing to move higher overnight there. UK FTSE dismal, down yesterday and stuck in a range, not making any progress at the moment. You can see the decline there yesterday of nearly 100 points from this BRN down to here, and then overnight the market sitting at the close. In the US dollar, still short at the moment, which is boosting the metals, so let's have a look at those. So yesterday in the silver market, another good day, breaking through the 200 MA. Let's see how long this lasts, as they'll try and hammer this back down during today. I saw an email yesterday saying that expect silver to get through $30. Not a cat in hell's chance of that happening unless the dollar collapses. There's no way they're going to allow silver to move up to that sort of price level. They tried that in 2020 and they monkey hammered it all the way back down. In fact, you can see, you'll be able to see it in the monthly chart. Let's have a look. That was when they rallied the market up, got close to $30, and then you can see the next month they just hammered it all the way back down, and they tried again a few months later, and ever since then it's been, we want you down here, we want you down at the $16 level, and they keep trying. I mean, it is holding out quite well, but like I keep saying, you know, it's unbelievable that this market is still 50% cheaper than it was in 1979 and 2011, considering we've had the inflation as well. I mean, bearing in mind how much things have gone up, and yet it's still 50% cheaper. The mining costs have gone up, and the gold-silver ratio out of the ground is something like 8-1. And yet with the manipulation and with the derivatives, they're able to suppress the price. And as I said before, they want to keep buying gold from for all of the central banks. So in the 30-minute yesterday, moving higher, and you can see this, but overnight we're sitting at the close, so get ready for a walloping during today, because there's always going to be a dead cat bounce even if the dollar is moving lower. Gold moving up once more after being crushed from the $2,000 level once again, and the 30-minute chart there showing the move to the upside. But as I said before, the central banks are buying more gold now than they have ever done before. Let me just get you that and show you. And there you can see central banks binge is even bigger than previously thought, and then it just goes through what's in the article. But as I don't pay for it, you can't see it all. But yeah, central banks have loaded up on more gold than previously thought this year, offering crucial support to prices. That's an absolute joke, that bit. It's not offering support for prices because they hammer the price down and then they bring it back. I mean, that's what we've seen as you look here. So as they've been buying over the year, they've been hammering the price down. Let's have a look at a monthly chart of gold. So there you can see we moved up and moved down. Look at that, we've got a triple top there. Just bring that down. So again, you can see how important that $2,000 level is. We need to take that out, and then it might be a chance of seeing the market move higher. But again, you can see over the last few months how they've hammered the price down, and that ties in with this. It's not supporting the price. That's a joke, absolute joke. It's using the derivatives to put the market under pressure to then buy the gold cheaper. Okay, let's have a quick look at the gold-silver ratio before we look at the basic trades. And let me just move this down so we can see it. So yeah, silver's done well over the last few days. The gold-silver ratio has been hammered back down. If it goes down to 78, then we'll start to see a reversal in the price and an increase in the gold-silver ratio. They're not going to let it go up yet. That's for sure. Okay, let's move on and have a look at the basic signals in Omni. So yesterday's basic trades, we can see the market's actually sideways there, moving higher but stuck in a sideways range. You've got that triangular formation there, and nothing really happened as we'd had 2 days of CPI from the UK and US. So the market just traded in a range, and then we had a potential sell signal. We've got the R1 there at the scalp and also the 50 EMA. Market's likely to bounce off this area. It came down, filled the trade, and then bounced off the area, as you can see there. So you've got to be observant about where the supports are, particularly first thing in the morning. Market bounces, and take note of this bar as well, how the market bounced back, because we had exactly the same pattern during the afternoon. So there was only the one trade in the morning session, which you can see there again, the market going down and retesting, but this time managing to get through the 50 and the BRN and stopping at the R1, which is generally another pattern as well. First time the market finds support, second time it'll actually go through it and give you a few more points. So let's go to the afternoon, and you can see there we're still round about the R1. Market really quiet for the day. Market moving higher with the Dow as it opened, and again we're going to go through quite a few price bars because it was so quiet. We had a potential sell there. This time we've got the 200 MA in the way, and then we've got the R1 below it. Unfortunately for me, I was due to go out at this point, so traded it down, as you'll see in a moment, and then getting out, and then there we go. The market doing what it should do, was going back down to the R1 and the BRN. What I should have done was just to put a profit target in, and then left it, but I was running late, so off I dashed, having taken the profit. And then the market does exactly the same. See that bar? Same as the one we saw in the first trade in the morning session, how they want to bring the market back every time. You know, the shorts are covering the positions and then bringing the market back. And then finally we had, whoops, I'll just bring this back, with a potential buy signal that wasn't filled. And then was followed by a sell. It's got to break the 200 MA, the black line, to move lower. Prices do this, and then they trade down. I'm just going to fast forward this because it went on for some time, as you'll see. So let's just keep going, and eventually we go through the scalp, and then we go down to the R1 again, where the market had found support on the left, which is an area where you'd want to think about taking profits, and therefore that's exactly what I did as the market came back. And also we're getting into the time when the spread widens with a lot of platforms after 4:30. At this point we're only around 10 past 4, by the looks of things. So, whoops, there you go. You'll see me just do this a bit more slowly. It's always difficult with scrubbing the timeline, as they say. So let's just do this for you. So there you can see taking the scalp off, now managing the trade with the 5 MA, and as the market comes back, then take the profits off the table. So good day all in all for the 2-minute DAX yesterday. All trades making profits, not major profits by any means, but all nonetheless it's better than having 3 or 4 losers when small profits are still preferred. Right, let's have a look at the overnight market, see what it's doing. So in the daily chart, you can see that we're close to the resistance to the left. Let me just mark that up for you. So we've got 2 sets of resistance there where the market could go to. The 16,000 isn't too far away either, actually, but the market doesn't like 16,000. It's come off that a few times when it's got to it. So again, keep an eye on those sorts of levels. There is others in between, of course. You've got one there that we've gone through, and then this one in between as well, which doesn't look too far off. So let me just draw those in just so that you've got the numbers and you can make a note of them. So that's the number 15,905, which again is 95 points short of that psychological level of 16,000. Overnight markets above the close at the moment and above all the averages as well, so still looking fairly bullish. And it's Friday. We know what happened last Friday. They just ramped the markets higher. There's the high for today. Got to get through the BRN, but at the moment above the close there as well. Okay, that will do it for this one. Let's see what the markets have in store today. And as ever, thanks for watching. See you in the next one.